Aloha. I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years, I have focused on and specialized in the infinite banking concept and developing the tax-free cash growth warehouse finance strategy. If you find this video to be helpful, please like this video and subscribe to this channel and share it with your family and friends. Also, please post your questions and comments here. Now, I'm going to talk about a particular bit of psychology that affects how most of us naturally see or think about infinite banking when we're first introduced to the concept. I'm going to call it plastic fantastic. Plastic, of course, is a noun referring to a substance made from petroleum products and formed into various products, such as containers and bags, and etc. But plastic is also a verb describing the characteristic of pliability or ability to be molded. In the song, Plastic Fantastic, it refers to a person who changes at will to be whatever they think you want them to be, putting on a front, so to speak. Well, we all have an image of ourselves in our own mind, and it's something that we create and believe to be who we really are. I don't know when this happens, and I suppose it's different for each individual, but I'm pretty sure it becomes our core self-image or CSI sometime in our young adulthood. It's a result of what we've become in our lives due to experiences and choices we've made along the way. And that core self-image that we establish just seems to continue on as is without adapting to the actual changes that happen to us as we continue on with our life and experiences. Weird, yes? For example, I've lived through 72 orbits of our solar system's sun now. But my CSI, my core self-image, is still just 29 years old, chronologically at least. And I know that's not just me. I've talked to several other people about this. They all have a similar thing going on about their core identity. On the other hand, I estimate my age to be somewhere around 300 or 400 years. Don't judge me. I can't even explain it myself. Is it real or is it Memorex? Of course, our CSI isn't something that we consciously construct in our minds. It just naturally happens. It's no doubt at least partially derived out of denial and wishful thinking. But is it set in stone? Is it real or is it Memorex? Now, if you remember those ads, real or Memorex, you've no doubt created your own CSI by now as well. See, I know that several things are set or fixed in the CSI I've created of myself. And now that I'm aware of the fact that it is a fantastical version of my much younger self, I am aware of the need to check myself when I think I'm up to a task that may well have been up for when I was 29, but maybe not so much now. But here's the thing. Once you realize that you have generated your CSI, contrary to what the real truth may be, you can control, change, adapt it to be more in line with your current reality. Here's an example. When I was 29, I could eat whatever I wanted and I could drop any extra body fat relatively easily by simple short-term dietary adjustments. Well, I wish that were still true, but it ain't. When we realize that we have created a core self-image that is based on realities that are now past, and we take a reality check and make certain adjustments, it can be a huge benefit to us. None of us are static in time. Every single day, we all get one day older. In fact, tomorrow's not even assured. Anything can happen. Besides the physical imperfections or implications, I should say, another reality check that can be a huge benefit to us is that of checking our financial security beliefs. There are so many financial fictions that people still believe are true, and many of them are downright harmful. One is that if you save 10% of your income from your early 30s on, you will have enough to comfortably retire on when you're retirement age. Well, that saying came about, or that thought was promoted back when the assumption was that you could earn 10% annual interest with the banks. But that hasn't been the case for decades. Now, 3.5% is a good rate on a CD. And bank savings accounts are barely paying 1%, which of course is well below the inflation rate. Add to that the fees the banks take from you, and you'll be in the poorhouse for sure if you rely on that strategy for retirement. And the good news is that there is a guaranteed, safe, high compounding interest account that you can use to grow your wealth tax-free. Use it to finance the things you buy now. Use it for tax-free retirement income, and that will also provide a nice tax-free benefit for your loved ones when you eventually pass away. Now, I know that sounds too good to be true, but that's only because it isn't promoted by the financial institutions or financial planners. It is true, and it's protected and tax-free due to the IRS code 7702. You can look it up. It applies only to cash value life insurance. That's IRS code 7702. And that's great as it is. But there's another layer that can be applied that very few, even finance professionals, know about. And this layer I referred to consists of the specific type of cash value life insurance and the way it is designed. The specific type is participating whole life with a mutual company. The design includes special cash-rich riders that force the policy to build cash value immediately and grow much faster than it ordinarily would without the riders. Then the policy cash value can be used with an incredible finance strategy that actually doubles the value of your cash account and empowers your money to work in multiple places at the same time. Let me just repeat that, because this is the part that is really so hard for most people to get their heads wrapped around. The policy cash value can be used with this finance strategy that actually doubles the value of your cash account and empowers your money to work in multiple places at the same time. Again, I know that sounds too good to be true, but it is true. The basic finance strategy is called the infinite banking concept. It has been practiced for well over 100 years in the United States, nearly 200 years actually, by some of the most successful business people in history. Cornelius Vanderbilt was one. Andrew Carnegie was another. The Rockefellers have been using this strategy ever since John D. was put it into action. Ray Kroc of McDonald's fame, Walt Disney, J.C. Penney, the Kennedys, These are all among those savvy business people and so many more. You don't need to be a genius or a financial wizard to practice these strategies that are based on the infinite banking concept. You just need to get what I call a tax-free cash growth warehouse account going and learn the basics of how to employ it. You'll need to work with an agent or broker who is knowledgeable and experienced in designing these special turbocharged cash accounts and adjust your financial security beliefs that have been set in your core self image. You can do this. I can help you. I've been specializing in this concept and designing policies for the strategies since 2013. Do yourself a big favor, call, text, or email me, and let's talk about how this real, very powerful finance strategy can benefit you. There's no pressure, no obligation. The only way to lose is if you don't take action on this. Call, text, or email me today. Aloha and mahalo for watching.